came out that could definitely positively affect a business like SoFi. Now, SoFi on Monday will report their quarterly figures, so that's already an extremely important day where we'll get probably more information and guidance for 2025. I did a full prediction video already a couple of days ago. If you missed that, that will be in the top right corner. Now, what's also interesting is that we're going into this earnings report with some positive momentum, which is something that I can't remember we had before. Just this past week, the stock is up 16.25%.
Welcome to the Outlier Trading Room. My name is Chris Fuel. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Let's talk about that move, okay? So I had several people calling me out saying, you're such an idiot. SoFi was going to go back up. Dude, you don't know it's going back up, all right? So here's the thing. Whenever you're trading or investing, if the stock is going down, you don't have to hold on to it. I know I sound like a broken record, but a lot of people just don't understand that, right? They see this move right here, right? They see this humongous move from the bottom up, but they don't realize that from the top down, it was down 20.5%. And it could have continued on. It could have continued on, right? The trend was going down. And the trend reversed. Big deal. It happens, right? I saw somebody saying this video aged like sour milk, and it's like, no, not really. I mean, as a trader, you look at the charts, and if they're going one way, you can do one of two things. You can step in front of it and say, stop right there. All right, stop right there. I need you to turn around. I need you to go back the other way, thinking that your money can make that happen. Or you can say, the trend is moving this way. I'm going to jump on that trend as long as I can. And at some point, it's going to bend. And I'm okay with that. So it bent. Who cares? It went back up. Who cares? What I do care about is the fact that it's inside this order block. It's inside this order block. Oh, yeah, we can go left. We can go left. Yeah, ESAT, it's definitely gone up a ton. What I do care about is it's inside this order block here. These are large institutional orders waiting to be filled. And I found this one example the other day, which is a great example of how great order blocks are. NVIDIA has been bouncing in and out of this order block 6 times now. 6 times, right? I'm not saying that's going to happen to SoFi, but I am saying that it does have overhead resistance ahead of it right now. But leading up into earnings, it has the 10 over the 20, prices over the 50. So the outlier trend template shows it to be bullish right now. Leading up into earnings is a wonderful time to trade. I love trading up into earnings. I don't hold through earnings unless I've already built up a nice cushion of profit there, and that the expected move is not meant to break that that trend line I'm following, which is most likely the 10 moving average. But when it comes into an order block like this is where I get out. I'll show you my rules here. All right, so imagine, right, this is a 5-minute candle here. Imagine it goes up into that order block like this. Imagine it goes up into that order block. If it trends higher the rest of the day, I'm holding it. But I'll close it at the end of the day because order blocks are significant resistance. If it goes up into that order block and then reverses back out of it, I'm out right away. I'm out right away. Now, what you see right here, going up and then getting rejected, going up, and I don't know where it's going to land, but that order block will remain. Those open orders will continue to stay there until it closes above. Could it close above on Monday? Absolutely, for sure. The trend is higher. And in fact, let's go look at SoFi inside of the Outlier dashboard, because I honestly don't know where it's at right now inside of there. Give me just a second to load it in. All right, so first thing that I see is SoFi overheating? Strong bullish trend means analyst caution ahead of Q4 earnings. SoFi just really, really rings to me of the market cycle here, right? It really does. I'm not saying I'm going to call a top, but I am saying that the irrational exuberance that people get, the animal spirits that run wild, makes me nervous. Makes me really nervous. But let's go back to here. We have a buy signal on SoFi. That buy signal came on December 19th. It's kind of fluttered sideways from that point, and then it started to go up. And you can see right here, the greed continuing to grow. And that's what you want to see. If you're getting into a stock, you want to see the greed along with the price going up together. You can throw the 10, 20, 50 on top of there. And there's a lot of bullish sentiment behind this. So like I say, I wouldn't trade this because I don't want to trade into earnings and I don't want to trade into an order block. But right now, definitely a bullish trend going on for SoFi.
over $18. Even pre-market, we're still green. Of course, a lot can change on Friday, but the momentum has definitely been with SoFi in the last 6 months. The stock is up over 130%. Year on year, stock is up 127%. Market cap closing in to that $20 billion mark. Yes, I know some people will already look at the forward PE is extremely high. It's a bank, blah, blah, blah. Banks don't trade at 83 times forward PE. Okay, first of all.
Well, apparently they do. And this is why fundamentals don't matter, right? Like he was saying, people go out there and say banks don't trade at 83 times forward PE. Apparently they do. Apparently they, by God, do, right? Does that really matter? No. The fundamentals do not make the price. In fact, I was thinking about this. I was driving down the road earlier today, and I was thinking, I think we need some sort of saying talks about how only price matters, right? Only price pays. That's one of my sayings. But also fundamentals are excuses. I feel like that is justifiable because fundamentals are there for you to build up your case as to why a stock should do something. Worst word in history with investing or trading is a stock should do this, right? It should go up. It should go down. It should stop here. I will never say that. I don't think anybody should ever say that. I just said it. But it's not for us to decide if a stock is going to go up or if a stock is going to go down. And all that fundamentals you're compiling are just excuses. All those fundamentals that you're compiling are just reasoning to support your thesis. But it has no impact on the price. If your thesis is wrong and it goes down, does that mean your fundamentals were wrong when you found your thesis? Maybe. But to me, and I think I might have adjusted this a little bit, but I think fundamentals are excuses. Fundamentals are justification. Right? Something like that to say, I don't care. I don't think you should care. Price is the only thing that pays.
Don't really look at the PE right now. This company wasn't profitable a year ago. If you also look at the growth rates, the expected growth rates for EPS and even sales, they are still quite low in my opinion. Do you think that a bank will grow EPS 109% year over year or then 66% the year after that? Probably not, right? Probably not. So enough with that. Forward PE this, forward PE that. 5-10 years from now, let's talk about the PE. We also got a new price target, $30. Yes, we got $30 price target before the next earnings report. A small comparison to American Express, just talking about the multiples there. So let's touch on that in this video. And then, of course, this whole crypto saga, right? Previously, before SoFi became or got a bank license, SoFi was offering crypto. Then there was a condition. If you want to get a bank, then you will not be able to offer crypto anymore. Well, that might change, but that might not change as soon as you would expect. So let's talk about all of that in this video. If you enjoy this type of videos, give it a thumbs up, subscribe if not, really appreciate that. We're trying to reach 100,000 subscribers this year. So if you're new here, and I know a lot of you are SoFi holders and viewers, I've seen you on other channels, okay? Maybe consider hitting that red button. You can always unsubscribe.
Exactly. He knows. He knows. As Michael's saying, I don't care what gets clicks. Palantir's been paying me. How has Palantir been paying you, my friend? How has Palantir been paying you? With the price going up. Fundamentals be damned. Price has been going up, and price is all that pays. He said, Palantir is big support and push from the what kind of companies? Bro, I don't know what you're looking at, but I ain't looking at those companies. No way. I'm not Googling that. Hey, HeckTech found a new t-shirt, OPP for life. Only price pays for life.
Subscribe after the 100,000 subscriber plaque is here. So thank you very much. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/CouchInvestor. Thank you very much. So yesterday night, we all became experts in SEC filings and staff accounting bulletins.
Okay, that was funny. We all became experts in this because we found out about this last night. Okay, that reminds me of everybody who was, foreign policy experts and Ukraine experts overnight because some sort of news would break on Twitter. Okay, that's super funny. That was a good one.
Here, number 122 and then also 121 because that's the affected one. Okay, I'm not gonna lie, I did do a lot of searching, a lot of grok searching and all of that. But basically, what has happened here? Well, what has happened is this. SAB 22 is this one right here, will change how companies can account for the obligation to safeguard crypto assets instead of a mandatory liability recognition as per SAB 121. Entities now assess potential liabilities based on existing accounting standards for contingencies. This could potentially reduce the capital burden since these standards may not require the same level of liability recognition for every crypto asset under custody. The previous one was this. This required entities, including banks that held crypto assets for customers, to recognize these assets as both an asset and corresponding liability on their balance sheet. This treatment was seen as burdensome because it increased the capital requirements for banks due to the way balance sheet liabilities are managed, thus making crypto custody less economically viable. So in summary, while SAB 122 does not explicitly state that banks are now allowed to hold crypto, Bitcoin, whatever, it significantly alters the accounting framework, which was previously a major deterrent. This could lead to more banks engaging in or resuming crypto custody services, provided they manage and disclose the associated risk appropriately under the new guidelines. Now, if we go back here to 2022, by the way, this is the big difference. This thing right here is SEC. This OCC. That's a difference already. OCC conditionally approves SoFi Bank National Association. That was January 2022, so 3 years ago. They said the following: the conditions imposed require specific capital contributions, adherence to an operating agreement, and confirmation that the resulting bank will not engage in any crypto asset activities or services. Today's decision brings SoFi, a large fintech, inside the federal bank regulatory perimeter, where it will be subject to comprehensive supervision and the full panoply of bank regulations, including the Community Reinvestment Act. This levels the playing field and will ensure that SoFi's deposit and lending activities are conducted safely and soundly, including limiting the bank's ability to engage in crypto assets activities. We continue here. Among the other conditions, the OCC approvals requires that SoFi Bank shall not engage in any crypto asset activities or services currently performed by SoFi or any other crypto asset activities or services unless it has received prior written determination of no supervisory objection from the OCC under the provisions set forth in the operating agreement, which it must enter into with the OCC, and that following determination of the operating agreement, SoFi Bank will remain subject to the non-objection process discussed in OCC letter number 1179, which is this one right here. This thing was written back in 2021. What does the letter say? Well, the letter clarifies that the activities addressed...
Okay, so I'm nerding out pretty hard on this because I don't know. I don't know anything about how crypto is regulated, so I'm listening and paying attention. I'll give you some insight. So I do a lot of consulting with financial institutions, and I'm not sure if you understand like how it all works, but essentially when you deposit your money, right? When you make a deposit, that becomes a liability on the bank's balance sheet. Okay. So let's use round numbers. Your $1,000 you deposit, the bank now has to recognize that as a liability, and they can take your 1,000 and my 1,000 and Bob and Tony's and Wes's and Michael's and Demetrius's and Mari's thousands, and all pool those together and then loan out for someone to buy a new car, right? Let's say that ESAT needed a new F350, right? So it took a whole bunch of us in our measly $1,000 accounts to go fund ESAT's new F350. Now, that F350 loan is an asset, and they can either make loans, or they can make deposits, or they can hold cash. And a lot of times they hold a significant amount of overnight cash. There's I don't remember the regulations, but they have to have liquidity standards, right? So if the depositors come looking for their funds, they have to be able to liquidate and like satisfy those demands immediately. But I don't know how crypto goes into this. I don't have any idea how crypto goes into this. Let me catch up on the chat here. Tony Price. Tony only price pays. Tony only price pays price says Palantir is way overvalued. Wes says what's overvalued, overbought, can stay and be more overvalued. Same with what's over undervalued. Well said, Wes, right? The market can stay irrational much longer than you can stay solvent. And that's why I like to give that example of standing on the train tracks, looking at the train coming directly ahead and say, no, stop, turn around. You have to go the other direction right now. Because the market's going to do what the market's going to do. It's your job to see what it's doing and to go with it while it's going up, instead of betting against it while it's going up and getting ran over by that train. Thomas, I'm really wondering. I see several analysts saying the stock going down. Analysts versus YouTubers. SoFi stock? I mean, what I see is a bullish trend running up into an order block. So on the whole, I say I wouldn't trade it because of that. Once it crests that order block, I would be way more bullish, way more bullish. If it can't break through that order block, I would say watch it bounce for a while. It's just what happens with order blocks. Hey, Yarn, he made it. Yarn's been a long time friend of ours.
In those interpretive letters are legally permissible for a bank to engage in, provided the bank can demonstrate to the satisfaction of its supervisory office that it has full control in place to conduct the activity in safe and sound manner. Specifically, as described further below, a bank should notify its supervisory office in writing of its intention to engage in any of the activities addressed in their interpretive letter. The bank should not engage in the activities until it receives written notification of the supervisory office's non-objection. In deciding whether to grant supervisory non-objection, the supervisory office will evaluate the adequacy of the bank's risk management systems and controls and risk measurement systems to enable the bank to engage in the proposed activities in a safe and sound manner. So just because we've had the first step, which is a positive one, from the SEC, does not mean that next week suddenly SoFi will announce, oh, SoFi Crypto is back. No, I do want to hear them talk about that on Monday during the earnings call. I do want them to talk about the crypto asset and, well, the recent changes and how that will affect the company. Maybe they're already sending letters to explain, look, you've just seen what the SEC has announced. Maybe it's time for us to get back into the game. That would be already a big positive for me. Do I expect them to launch this already next month? No, I think it's going to take a while. It already existed. Of course, the product probably needs improvements. That's what many of you have been telling me, that the app is just not that user-friendly, right, for investing and stuff like that. But if SoFi truly wants to be that one-stop shop, then of course, offering crypto, and Anthony Noto is a big fan of that, offering crypto on that platform is definitely a must. And I do believe that in the next 12 months, that's definitely going to be on the app. I think the crypto offering is going to be there. There's going to be a huge crypto run when it comes to innovation, technologies, new companies, new revenue streams because of the new administration in the United States. And I think SoFi will fit right into that. It's going to take more time than what I've seen some posts already say, oh, SoFi can come back with crypto just like that tomorrow, next week. No, that doesn't work like that. Like I said, one is the SEC, one is the OCC. You still have to go through all the regulatory hurdles and all of that. If it were up to SoFi, then yeah, maybe next week it was already up and running. Could have been, but it's not. And I'm not here trying to be, oh, you're bearish. No, not at all. This is actually quite good because let's say they do get SoFi Crypto up and running faster than expected. Increase in revenue, right? Transaction fees, custody fees, and all of that. Increase in revenue. But remember that the guidance that they're giving us right now does not include this thing, does not include this increase. So not only are the analyst expectations already today lower than SoFi's management, right? When we talk about 26 EPS, midpoint 67 cents, it's already much lower than that, the analyst expectations. So not only do we have that, we also have now a potential, new product launch that will generate them a couple of millions of dollars, right? Tens of millions of dollars, maybe in the future, hundreds of millions of dollars. That will be added to our future projections and will be added to management's guidance as well. So I don't see, no, it's not coming immediately as a negative thing. No, right now there is already enough good news. The fact that Wall Street still underestimates SoFi, the fact that SoFi is still, probably one of the best managed fintech companies out there, keep on executing, headwinds becoming tailwinds, and now maybe we even got crypto that will come back. I'm not complaining. I'm not complaining at all. Also, I want to talk about the PSUs, and this is thanks to data-driven investing. He laid this out quite nicely in his Substack. So those are performance stock units. So this is basically what needs to happen.
I hope you don't mind me just listening. I really like Couch Investor because I feel like he does a great job of bringing receipts and explaining things. And I don't know anything about what he's talking about, so I'm excited to learn along with you. Tony says, you said there was a big order flow at $18 level. It is looking like average trading day with even buying and selling, just a boring day of consolidation. All right, so this is an order block, different from an order flow. And this order block was created, I got to go way back. So when price came through this level at November 26th, there were institutional orders waiting, sitting, and they weren't getting filled. And they haven't been filled. And so during this time, there's been other order blocks that have come and gone. Anytime price closes on the opposite side of the order block, it goes away. So let's follow this and see, has it come up to this before? I'm trying to see. No, this is the first time it's come up to this. And honestly, the longer they go back, the more difficult those order blocks can be to overcome. But that doesn't mean it can't happen, especially with earnings, right? And especially with the hype around SoFi. SoFi is like the darling stock right now. It feels like everybody's talking about it. Ivy League redneck. How you doing, my friend? First time I've seen you here, but I'm super stoked you made it. I just subscribed for your SoFi insight, but I still like the GOAT as well. Yeah, stock GOAT. I actually considered doing one of those from Kyle, but I was like, I'm gonna give Kyle a break. I'm gonna do Couch Investor today.
For all three of them, no total amount and white to basically get paid, right? These stock options will only vest if they hit certain stock prices, $25, $35, and well, the big one here is $45. They've got up until...
And this is one of those like really big things that a lot of people are putting their hats on. Like, hey, they're going to hit $45 a share because the executives are going to get buttloads of performance bonuses if they do. I absolutely can see that. Absolutely can see that. So I don't know if that'll happen. I'm only going to follow price, right? And these executives, I mean, realistically speaking, how should I phrase this? They could inside trade this, right? They could do whatever, right? They could come out on the earnings call and make up whatever, right? Not saying that that's legal, not saying that that's ethical, and I'm definitely not saying they could do it or that they will do it. Just a possibility, right? But at the end of the day, if you're basing your trading plan on this right here, and it doesn't work out, what are you going to do? These guys, they don't care. They're going to get paid no matter what. They may not get paid another $300 million. But if your target is $45, and by God, you're going to hold it until it reaches that point, and it turns around and just like plummets, are you okay with that? You holding that? Are you okay with being the bag holder there? Because I wouldn't be. So I would not base a trading plan based on this. They could be the greatest. They could be the greatest management team in the whole world, but I wouldn't base my trading plan on this. Hectech. Why do stocks bounce from order blocks? So, like I say, these are large institutional orders. They want to be filled, right? So, for example, this one right here in NVIDIA. In fact, is there an older one? Let's see. Here's another one. You can't tell me these don't work, right? These order blocks want to get filled. So every time they come down, they're getting filled, and they're getting filled, and they're getting filled, and they're getting filled, and then they can rocket ship up, and they don't always do that, right? But it's these institutional orders that are propping up the price or pushing down the price when it gets to those certain levels, right? Imagine that I've got an order and I say, imagine I've got an order at 1825, and I say, once SoFi gets back to 1825, I'm back to even. I want to get out. What's going to happen, right? It's going to push the price back down. Or I've got an order in NVIDIA at 130. And you know what? If it comes down, I'm going to get out. I'm going to get out as fast as I can. Or I should say the other way. I'm going to pick up more shares as fast as I can. So that's why they bounce like that. It's really cool. Thank you, Mike. Can you flash the TrendSpider discount link again? My pleasure. So order blocks, I use TrendSpider for charting. You don't have to use TrendSpider for charting. I do. It's a discount code. Have at it. I'm not going to push TrendSpider on you. Okay. So let's do this. Let's go ahead and finish up the video there, and then we'll get into trading. I'm going to rank his video. I'm going to rank it as, do me a favor in the chat. Where would you rank this? Right. He's not a 5 or below. He came with lots of receipts. I feel like I learned something. This would be a 7 if somebody got a 7. I'm struggling to give him an 8. So I'm going to give him a 6. Nothing personal. It's just, I just can't justify an 8 on this one. But if I gave people 7s, I would give 7s. Tazy, how you doing, Tazy? Number 8. I'm glad you made it, Tazy. Wes gives a 6. Hectech gives a 6. Yeah, there's nothing wrong with a 6. A 6 is equivalent to a 7 on our scale, but nobody gets a 7, right? I was reading this Tim Ferriss book where he's like, on a scale of 1 to 10, you can't use a 7. Tell me how you feel about this thing. Because everybody defaults to a 7. So that's why I say nobody gets a 7. But let's go to today's member highlight and our weekly winner circle. What in the wide world of sports is the weekly winner circle? Well, this is something we do, and it's really special here in Outlier. We have a section in our Discord called the Share Your Big Wins section. And in order to win, all you have to do is just post something into the Share Your Big Winners, right? You can talk about a winning trade you put on. You can talk about how, like Peter right here talked about CLS on Outlier Signal. He caught it right there. He made... How much did he make? So basically, he had a 2 ATR move, 126.80 up to, I can't really tell where he got in. Hang on. Okay, he bought it at 118, and overnight it went up to 126.80. So that was an outstanding move by Peter right there. Angry Baker said his big win was when he purchased Outlier. Awesome. Dave talked about RKLB now in our system here. Dave Guest, he put on his very first bull put option. So short put spread in Palantir. And the next day, but it still worked out for him, it looks like. Rugby Nut. Really wish I knew how to do puts and calls, but I avoid this. It looks way too dangerous. It absolutely can be, right? Outlier Mark, he's not eligible. There's me. Mikey Mike. Dave again. And Dave Guest. So all you have to do is post in this section. And what we do is we give you out a $10 Amazon gift card just for contributing and helping us out in the Discord. So I need to go back to the last winner. And the last winner was Mikey Mike, right? Hang on. Congrats to Mikey Mike. There it was. All right. So I'm going to make a note of who has contributed this week. So there was Dave Guest. There was Dave Guest, Finley, new to the Discord, Michael Wales, Dave, not Dave Guest, the other Dave, Peter from the Netherlands, then Angry Baker, Dave Guest, Rugby Nut, and was there anybody else? Yeah, so this is just something fun we do. We really appreciate all of you guys contributing in the Discord. So there is how many people here? We've got this +1. No, not +1. There we go. That is 7 people. So I'm going to drop this into random.org between 1 and 7. The random.org number is going to tell us who the winner is for this week. And that will come in 3, in 2, in 1. The weekly winner is number 5, who is Peter from the Netherlands. Hey, Peter, congratulations. I think this might be your first win. Congratulations to Peter. Congrats to @Peter for winning this week's weekly winners circle. There we go. Very cool. Now, April will send you that gift card on Monday. So congratulations to Peter. Yes. Yes, thanks. What about placing a buy order straight above an order block? Ooh, that is a very pro level move right there. That is a pro level move right there, right? Every time it comes back up, very pro level move. Peter, by all means, go for it, my friend. If you want to take that, I like it. Good idea. Congrats to Peter and everybody right there, right? So I also talked about how Mahesh dropped some announcements. So let's talk about that real quick. All right. So a few other things planned. Oh yeah. So we're going to work on this constituent heat map chart. That is this chart right here turned sideways, and it tells you how many stocks are bullish, how many stocks are greedy or fearful within that sector. And it's by day. But I was telling them, Mark and Mahesh, a while ago, I said, it's hard to tell that these are even 2 different charts, and they are 2 different charts because they look so similar. So we got to talking about this the other day, and I was like, what if we made it look like the MACD indicator? I'll show you what I mean. MACD. And when we pulled this up and we talked about how the MACD indicator looks with how many stocks are bullish versus bearish, how many stocks are greedy versus fearful, and like the net value, one minus the other, how that would represent on there being inside the chart. Mark and Mahesh were like, oh, that makes sense. I like where that's going. So Mark is evaluating a few different options on what this could look like. So if you guys want to give some feedback to him, by all means, please do. That's over in the Discord. But let's read Mahesh's announcements real quick. Within notification settings, you'll be able to set a heat map value for both up and down directions. Very cool. So Dave pointed out, and I missed it, Dave, the first time I saw it. So you'll be able to hit both up or down on these notifications here. So that's exciting. Want to get notifications if it's above or below R24 or above or below G15, which is perfect because that's how I like to exit. You'll be able to cover your basis in both directions. Currently, constituent map, the small chart on the right-hand side of the chart. So this guy right here, talking about that, gets updated when you hover your mouse, right? So this, every time I move my mouse, it will change, right? That's something I've asked him to change to like a clicking thing. We're changing it to get it updated. So when you click, it'll give you that option for that day. So you can just click one day and it'll stick, click another day, it'll stick. And several people have reached out about that. There's a bug where you can't see the min max value on the screener in dark mode. I don't like dark mode. Do you like dark mode? I've never used it, but it just doesn't work with my eyeballs. So he's fixing a bug on that. Saving user settings for EMAs or time periods, as many of you suggested. So for example, if I put on these EMAs right here, and then I go to another stock, let's go to like NVIDIA, my settings don't transfer over. And so Mahesh is going to make it so that those settings will stick. Like, see, those moving averages are gone. Like when I blow through charts over here on TrendSpider, all my settings stick. So we're going to make that happen too. Data shown on the dashboard will be from 2020 onwards. Oh, it says right now on this recent update, it's only 2021 onwards. So we'll have 2020 going forward. So we're definitely trying our very best to continuously improve this product. As you can see, we want to make this the very best stock analysis platform in the world, like better than anything out there. So we value your feedback. You are helping make this better. So please continue to let us know how we can make Outlier better for you. That is the important part here. Tony Price gave that video a 5, and Peter says, thanks all. All right, so super cool. Be sure to share your stories in the Discord so we can make it better for you. And of course, tell everybody you know about Outlier and hit the like button too. Now back to trading. We still got some time. What is Outlier and how does it work? Warren Buffett once said, be fearful when others are greedy, and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy, and by how much, allowing you to get into the stock before the Outlier move happens. And you could get in to the Outlier annual pass for just 82 cents a day. That's crazy. But this offer ends at the end of the month. Now, my style of trading, I like to call the golden ticket trading strategy. It starts with the market. You want to see the 10 over the 20 with price over the 50 on the SPY. So let's go to the SPY. SPY's had a little pullback today. Let me drop this MACD. I don't trade with that. That order block that had been there is gone now. It must have closed on the other side of it. In fact, let me double check. I don't have those turned off. Yeah, I do. Okay, I have them turned on. The other day I was reacting to a video and I was like, oh, my order blocks are turned off. So we're good there. But yeah, SPY's pulling back a little bit, but the 10's over the 20, prices over the 50. So the Outlier trend template is still bullish. Can you elaborate on the buy above the order block? So for example, you could do it either one of these two ways, right? You could say anytime price goes above the order block line from below, right? Like when it's moving up and out of it, that could be a buy signal for you there. This reminds me of Nicholas Darvis. He's the author of How I Made, the book is called, excuse me, How I Made $2 Million in the Stock Market. How I Made $2 million in the stock market. Stock market, hang on. A very, very good book. There's also a newer edition by my friend Steve Burns, and he kind of made it with, I have it on my shelf behind me. I'm trying not to take too much time. But yeah, this version right here, my friend Steve Burns added some like newer commentary to it because the book was written in the 50s, but that's what he would do. When something would break out of an area, maybe from like $100 and above, right? If it had been stopping at 100, that was his buy point. Very, very good book if you want to pick it up. Super easy read too. But let's continue on. So the market is in a bullish trend. Next, I want to see the market breadth. And this is bullish, like ultra bullish. In fact, it might be getting to the point where it's overbought. Let's just double check it real quick. So currently, this green line is tracking how many stocks are getting buy signals. And it, as of today, is at 74.76. When it gets at 75, which I'm going to consider today, once it goes up to that point, I'm still interested in trading. But if it starts to come back down, so from 75 back to 74, or 74, 5, 6, 7, 8, and then back to 77, that's when I would stop trading, right? We're not going to get a whole lot of time to trade with this, unfortunately. This signal didn't line up with the most amount of time with it, but that's okay. That's how trading goes sometimes. Now, we do have a buy signal on the S&P 500. The market trend is trending higher. Market breadth is trending higher, and sector breadth. I just did some research this morning while I was drinking my coffee. Only the energy sector and the material sector are not bullish right now. Everything else is bullish, but they're all getting really high. So next, I run my screener. Before we put on any new trades, we need to look to reduce risk, right? I know I'm not going to be putting on any new trades today. That's why I kind of let the video go a little bit longer, because I know we are only going to be taking off one trade. Now, why are we going to be taking off that trade? That's the question you have to ask yourself is, right? If I have, let's go to the watch list real quick. If I have the opportunity to put on, I think there were 77 new names on the bull list today. There are 77 new buy signals just today. If I have the opportunity to put on 77 new ones today, why wouldn't you? Right? Well, there's a process here. Now, first, I follow a very, very stringent set of rules. So on all my trades, I want to see on each day before I look to put on a new trade if it's breaking anything and I need to get out. So I'm in 2 right now, and this is a new thing in Outlier. You can make a new list. So I made a new current portfolio list. And we've got HSBC and CNP. So let's go to HSBC first, and we'll talk about this one. Let's go to HSBC chart. All right, so yesterday afternoon, I got in at 51.45, right? And as of right now, it's at 51.31. So it's not going anywhere at the moment. That's okay. The 10 EMA is not broken. The 10 EMA is down here. The half ATR value from entry is not broken. So this is one half of an ATR. This is one ATR up. So in half ATR, that's my stop loss point. That's not broken. There are no order blocks in the way that I can see. The Outlier heat map. Let's go look at the heat map. As you know, this is how much we measure the fear and greed. And once it stops getting greedier, that's when I stop holding onto the stock. So yesterday it was at G, and so I'm looking at this value right here. Yesterday it was at G21. Today is at G22. So the greedier, or the greed is still coming in. So I will still hold it. And we haven't rolled it yet, so we're good there. And then my exit point on the spread was the sell into strength at G31, and it's at G22 right now. So I'm going to hold HSBC. I don't have a reason to get out. That's what you need to think of. Do I have a reason to get out? I don't. So I'm going to hold it. Next, and the only other stock I have is CNP. Now, CNP, we got some things going on. First off, this order block wasn't here yesterday. Otherwise, I wouldn't have been in it. Second, it's running into an order block, so I have to get out of it. The 10 EMA is not broken right now. Now, I don't care if it goes down through these points during the day. I don't care at all. I only care about end of day pricing. I do not care about intraday pricing unless it's rolling up into an order block and you get out of it. If it goes past my half ATR, goes past the 10 EMA during the day, doesn't matter. All I care about is the end of day pricing. So this is not broken. This is not broken, but the Outlier heat map has stalled and it's now dealing with an order block. So I'll show you what I mean by the heat map stalling. I'm going to zoom in. So yesterday, the heat map value was G26. Remember, look right here. G26. Today, the heat map value is also G26. So to me, that is an exit signal. I know why I'm going to get out because that heat map is not going higher. The greed is not coming in. So let's go execute closing that trade. So this is C and P. And we're not going to win any. We're not going to make any money on this trade, but that's okay. How far off is it? It's literally 11 cents off from where I got in. I am a-okay with that. Going to C and P. This is so I have my business account on this screen, and then I have the display account that I like to show on the other screen. So this is the C and P, February 21st, 31 calls. So in this case, we're going to be hitting the bid to sell out to close the trade. So this is a sell to close full position. Put in the order, average fill price, looks like 167. Hang on. Ooh. No. Okay. I thought I got filled for 185. Like half of it got filled at 185 and then 167. But no. Average fill price was 170. 170 is where I got out. Could have been better. Could have been 173, but I'm out at 173. I'm sorry, 170. So I'm going to come over here to the Discord. I'm going to drop this in the Outlier trading room. So full transparency, this is how I do it. Where is it at? HCMP. So then I'm going to reply to this. I'm going to say, I have to copy my template real quick. Closed 11 slash. That get me something? Yeah. So I put what it was, why I closed it. 124.25. Trade number 1 closed C and P. This was the February 21st. 31 calls. Yep. For 170 is where my fill price was. Close below heat map stall. And so how big of a difference was that to me? I always like to put out how much profit or loss I made on it. So give me a second here. Got the calculation. 70. So that was where's it at? Oh, my math is gone on this. Let's just do the math this way. So I got in at 185. So 185 minus 170, okay, divided by 185 means an 8% loss. That's fine. Yeah, my math in my spreadsheet got off somewhere. It says I have a negative 139% on that. So clearly my math got off somewhere in the spreadsheet, but it's an 8% loss. So I'm going to put 8.01% loss. All right. And that is nothing. That is absolutely nothing. Like in my portfolio, I don't even recognize it. I usually put the portfolio change too, but like I say, something got off on my math. I need to double check it. Okay. So that's the only 2 trades that I had on, and I've already taken one off. Now let's go to the next step, which is running the screener. These are my screener criterias here. And when I run the screener, and check this, I've got 1, 2, 3 that show up for me today. Just DEC, GoDaddy, and Visa. I've already double checked those guys, dropped them. Oh, and there were 3, what is the word I'm thinking of? 3 ETFs. 1, 2, 3. So I threw those into TrendSpider and running the screener real quick. DEC looks good. So let's go to DEC. I'll tell you why I'm not going to get these real quick. So DEC, February 21st. It does have some liquidity. This would be the only one that has enough liquidity. I want to see over 250 open interest. Right here, 250 plus open interest. But that's the only one, and that's a 60 delta. So the extrinsic value at $9 is about 2/3 of that, so 66% of the option price. And I want to see that at 20% or less. So I wouldn't take on DEC. The next one. is GoDaddy. We traded that a few times last year. GDDY. And GDDY, same thing. We've got one that might be close enough at 233 open interest at the 72 delta, 426 on 1690. So let's do the math there. 433 on 1690 is 25%. That's not so bad, but my personal limit is $10 per contract, and this is like 60% over that. So that's another reason why I wouldn't trade it. But overall, it's not so bad. Let's go to the next one. SpyG. SpyG does not have much liquidity at all, so I wouldn't trade that. And then lastly was Visa, which, I mean, that's brilliant. That's what you want to see. But I know Visa is going to be really overpriced. We go here. I mean, there's lots of liquidity. If we go to the 80 delta, there's two, but you know, we can go up to 83 delta, and it's $22. That's $22. My limit's $10 a contract. That's just a personal limit that I've had forever. It allows me to get a lot of other contracts and a lot of other things instead of be so concentrated in one or the other. So that's why I don't have any trades to put on today. But I do want to catch up on the chat here. Barney 9. Is that like the Empire Strikes Back? Barney 9. That most current day is not live. Correct. So today's candle, it gets updated overnight, and the today candle isn't what's actually happening today. You can't use Outlier for current day stats. So it doesn't have today's candle built yet because the data runs once overnight. So it's just copying yesterday's candle onto today. It actually runs, I think it's at 10 p.m. West Coast time. So it doesn't work for intraday, and it was never designed to work for intraday. That may be an enhancement we could do in the future, but you are correct. You are correct on that. I bought this up on the Discord. Oh, you brought it up on the Discord. Gotcha. My hedge may make an upgrade for that. I don't know. G22 is not necessarily a stall. That would make sense. I would actually consider it a stall. I would 100% consider it a stall. Let's go to CMP, right? So G26 to G26, that's not going anywhere, right? Now let's go back. Let's go back to here, right? So when it's going up, that's what we're looking for. When it's going up, right? So imagine this buy signal that came through here on November 12th, moving up. You can see the greed value going up higher and higher and higher. And then it did start to flounder. You see the heat map stalling right there, days before the sell signal came, in fact. I mean, you could have got 1, 2, 3, 4 or 5 days before the sell signal came just by looking at that heat map right there. Is it getting more and more greedy, or less greedy? So for me, that is absolutely an exit signal. So that's just how I trade it. And you know what's really cool about Outlier is that it gives you so much information. You can trade with it a million different ways. We have not figured out the optimal way to trade with this yet. I'll put it that way. We are still figuring this out. In fact, I am 100% going to enter the US Investing Championship for 2025. 2026. I didn't this year for the reason of around the middle of last year, we discovered the master key. And then in November, we also discovered how getting into the stock with that 0 to 5% in the last 5 days. Let me show you what I mean. This right here, this is actually something I requested that we got added in, was that if a stock has not, or if a stock has moved less than 5% in the last 5 days, it still has room to make that outlier move. But if it's gone more than 5%, I actually had a lower win rate. So that's something we found just in November. So I absolutely 100% am going to be coming in 26, and we're going to use all of 2025 to figure out what the optimal trading scenario will be. So I'm super stoked about that. Bob says the oscillator value also declined. Yeah, it did. Wes, I like how heat map stall keeps you from entering a trade. Yeah, for sure. And now that's a thing on here. That's a thing on here. The heat map has to be moving up before I get into the trade. Otherwise, I'm not even interested. Not even interested. I want it to get greedier, right? That makes sense, right? Let me know in the chat if it doesn't. So that's going to wrap it for me. I'm still holding HSBC into the weekend. I don't have a reason to get out. I have all of the dry powder in the world in my account right now. And I am looking forward to new trades on Monday. But do me a favor, of course. Tell me what you're trading in the chat. That's what I really want to hear, right? And of course, come back tomorrow where I'll help you save time, make money, and start winning with less risk together as a team. Let us know if you need anything over in the Discord, and have a fantastic weekend. We'll talk soon.